All right, so this is for CMT level 1, and we are recording the first chapter of it. So what we're discussing here is the basic principle of technical analysis, which is TA in short form, and we're talking about the trend. So what is the trend? So let's try and understand. So stocks could either be possibly moving upwards, so that's an upward trend. The stocks could possibly be going down, which is a downward trend, or it is also possible that the stocks are not moving anywhere. So they're just consolidating at the same level. They're just moving, hovering around the same level, not moving either in an upside direction or a downward direction. It could possibly be there. Now there are various types of trend, that we'll talk about. Even an uptrend could have a certain angular movement to it, which can be measured by an angle, or the downtrend could also be an angular movement. So it can be, which can be measured by an angle. So these are some things, finer aspects that we'll try and understand. So we'll get into it, but just we are trying to understand. And the technical analysis assumes three things, which which should know, and that is what the book says. So these are the three things. One is the stocks are, or whichever asset class you're talking about, they are freely traded. So just make a note of this one. Second is that there are there are market prices. So all they are tradable at market prices, and the market prices have a trend. So either they are moving upwards, or they are moving downwards, or they are not going anywhere. They're just hovering in a certain zone. So these are the three things that you should be aware. Now, how can you make money using technical analysis? That's a very important part, which is this level 1 addresses. So again, make the trends your friend. So basically, trend is a friend. So if you can catch a trend, if it is moving upwards, there is a possibility of making money. If the trend is going down, and if you catch that trend, you can short it, or it is not moving anywhere, then you can build some strategy around it and you can make money. Second is the TA makes you a good analyst on the control side. So don't lose too much, and you can control losses. That is the what the technical analysis teaches you all about, and then also helps you in managing your money and managing the risk. So you are not only managing money, and how do you manage money? You are managing the money by managing the risk. So these are the key features. This is how you tend to benefit from technical analysis. That is what that will help you in making money. Otherwise, this is why you need technical analysis basically. So let's try and understand what is an uptrend. So the stock never moves like this. The stock always moves up, falls, corrects a little bit, moves up, corrects a little bit, moves up, corrects a little bit. This is known as an uptrend. This is in a sequence. This is known as, say, the lower point. This is a lower point. This is a lower point. This is the highest point in this sequence. In this sequence, this is the highest point. This is the lowest point. In this sequence of movement, this is the highest point that you see. This is the lowest point. And in the sequence of movement, this is the highest point. This is the lowest point. So it is making a combination of it. So I can call it H1, I can call it H2, I can call it H3, I can call it L1, I can call it L2, and I can call it L3. That's an uptrend. So when it is coming down, likewise, it never falls like this. It never falls 90 degree. It always follows a certain trend. So it comes down, moves up, comes down, moves up, comes down, little bit picks up and moves down. Now this is a higher point. This is the lowest point. This is lower point again. This is a higher point. This is again a lower point. This is a higher point. So let me call it H1, L1, H2, L2, H3, L3. Now in this case, when it was moving upwards, the H3 was greater than H2 was greater than H1, plus the L3 was greater than L2 was greater than L3. That means it is making higher highs and higher lows. Now, in this case, what is happening is H1 is greater than H2 is greater than H3, plus the L1 is at higher price is at L2 is greater than L3. Does that make sense? So when it is falling, all your previous prices are at a higher point, and the lower prices are also at a higher point. Let me explain this using a vertical angle now, which is, or vertical scale, as I can say. So say this is a vertical scale here. Say this is a vertical scale. Okay, so maybe you got 0 here, 5, 10, 15, and 20. When the stock is moving up, it goes up to 5, falls maybe to 2.5, then moves up to 10, then falls to 7.5 level, goes up to 15, falls to 12.5, and goes to 20 and falls to 17 and a half. This is just a representation. The stock is not that symmetrical, but just a representation. Now, if you measure this H1, H2, H3, and H4, if you measure this, H1 is equal to 5, H2 is equal to 10, H3 is equal to 15, and H4 is equal to 20. If you measure L1, this is L1, L2, L3, and L4, which is the middle distance. So L1 is 2.5, L2 is 7.5, L3 is 12.5, and L4 is 17.5. Right? So when it is climbing upwards, you will notice that L4 is greater than L3 is greater than L2 is greater than L1. So every time it falls, but never goes to the same level, and hence the lowest points are always staggered upside, or they are moving upwards. Likewise, when it is moving upside, you'll notice that H4 is greater than H3 is greater than H2 is greater than H1. So it is moving upwards, right? Just keeps on moving upwards. All the levels are at higher level because you have plotted it on a vertical scale. Just the opposite side of it, and we will then stop there. So what I'm going to do is, I will just remove these lines here. Just give me, yeah. So these are gone. Let me remove this one. And I will quickly then, I think, plot it for you. Just give me 1 second. Here we go. Here we go. Here we go. Don't want to clean up everything. Yeah, now it is a clean slate here in front of us. Okay, now when this is coming down, so they say this was the upward movement here. Say it is coming down. Okay, say this is 20. Say this is 17.5. Say this is 10. Let us say this is this is 12.5. Sorry, yeah, this is 12.5 here. Oops, this is 12.5, and this is 7. This is 12.5. Should be 7.5 here. So that is what means. So when it is falling, the if you call this as H4, H1, H2, H3, and H4. So in this case, H1 is greater than H2 is greater than HV. That means every time it falls, it never goes back to the higher level, the previous higher level. It just keeps on falling. Right? Now, likewise, if you plot the L's, L1, L2, L3, if you notice this level versus this level versus this level. So L1 is greater than L2 is greater than L3 is greater than L4. That means it just keeps on falling. It always makes a new low. So L1 is above the first low is above the second low, is above the third low, is above the fourth low. So that is these combination. Now let me write it clearly. So what is an uptrend? Let me just plot it one more time. It's a combination of H1 is H2 is H3 H4 plus L4 is greater, L1 is greater than L2 is greater than L3 is greater than L4. This combination is known as an uptrend according to Charles Dow theory. It has to be there. Now, if it is a downtrend, if you are plotting downtrend, then what happens is H1 is greater than H2 is greater than H3. So the first high, when it started falling, the H1 was at the highest level and it keeps falling. Plus, there has to be a plus sign, and L1 is greater than L2 is greater than L3 is greater than. So there is the lower points also. It is making lower lows and it is making lower highs. Lower lows and lower highs is downtrend. Higher highs and higher lows is an uptrend. So we'll stop here. That's the first session on the CMT level 1, and we will resume on that. Thank you.